Good weekend, all. Ira Epstein of Linn & Associates with your weekend edition of your SPDR ETF video for this Friday, April 24th, 2020. Now, the weekend edition we do differently. We're going to show weekly charts rather than daily charts to get the bigger trade picture as to what's going on. We don't cover everything behind me. I do that, as you know already, in my SPDR ETF video in the afternoon. So in the afternoon, right after the markets close, I record a different video than the type you're seeing here. I'm not in it. I'm recording over my screens. The colors are very different, more studies, and I'm saying I want you to buy here, sell there. I'm debating if that's really the best time to do it. Sometimes I keep thinking maybe I should do one early in the morning. That might be much better and help traders as the markets get going. But I'm debating about it. And the reason is the futures are already open, and then what happens is the ETF spiders try to catch up to them. So we have a strong finish to the week. There's one market that's in the red today. Everything else is either unchanged or higher. The unchanged was, as you can see, SLV and oil, but everything else higher. The event, we are opening up some of the states. Now, not we, it's the governors of certain states are opening. We're all watching Georgia because it's going to open restaurants come Monday. It's opening bowling alleys right now, nail salons, barber and beauty salons are opening up. Retail stores are opening in a certain way. So certain things are starting to happen, and we're going to see how they handle social distancing, how people feel about going out, where this is going to carry the market. It's going to be strange. Then other states are going to come in and do theirs. So this is the beginning of an event. The event can get shut down extremely quick. If, what's the if? You know it. If COVID-19 returns in any of these areas that they opened possibly too soon. We don't know what too soon is. They may be dead right and you go ahead with it. It's brand new. Nobody knows. All right. So let's go and take a look at the first chart if I could. And we're going to take a look at the technology sector. And the first thing I'm doing on this is the weekly chart. You can see your highs and lows. And I've put on Fibonacci counts from the very top to the bottom and how the market is retraced. And we got up to a 62% retracement. That's a good, strong retracement. But it doesn't take it out of the realm where it can't get back to those lows. I think when you get into the 70%, throw that idea of going back there down off a Fibonacci count. You're right at the do or die numbers. It's going to be very interesting. Why? 5 of the monster tech companies report this week. That's unusual to begin with, and it all happens, I think, between the 28th and the 30th. You might want to read the papers to check on what I'm saying, but it's going to be fascinating. That will determine a lot this week on this chart. When we take a look at swing lines, now we'll just go to the studies on them. We have a pattern of lower highs and lower lows. That in itself is bearish. You'd have to take out 89.67 to negate that bearishness, and actually that would turn you bullish in the instant, because then you could have higher lows and a higher high. Depends, of course, where you'd finish up the week, but this is a weekly chart, and that's what it would do initially. Where's the resistance? Right there. The 90.07 level. So if you get up and do that, you're going to be fighting a battle. Let's assume the market succeeds and it likes the numbers. You close over 89.67. So what's the what if? If you do that, well, I think the bulls will go home long that week. The stop would be under this low if that's the low that ends up and the market doesn't go to a lower low first. Let's assume the market doesn't go for that and it starts down. The trend's already down. Then 77.55, the 100 week, is the possibility there. You're right at a key number area. It's going to be an interesting time. In terms of the Bollinger Bands, I'm going to say they're not in play. Now, when I say they're not in play, here's what I mean. They're so far away to the upside and the downside, it will take something major to make them come into play like they were over here. The market was much closer to them. So I don't pay that much attention. I'm not looking for them unless the market makes an extreme move, and then I'll jump all over it via the daily charts. What about momentum? On the weekly chart, instead of looking for overbought, oversold, I view momentum as either pointing up, down or sideways. I treat it much differently on the daily charts and much differently if we're looking at 15-minute charts or others. So the pattern I'm seeing here is lower highs, lower lows. Momentum has been pointing up, bias down. I still think the bears are in control, but barely so. If you get over 89, 67, I think the bears will run and be gone. When we come to XLI, which is the industrial sector, here's the difference. Instead of getting up to that 62%, you're stuck at 38. So this chart's much more bearish. Very possible that if we get under 59.37, we go for these lows again. That's the trigger number now. So we've had a pattern of lower highs, but now we have a higher low. Do you see it right there? What's ruling the day is the fact that the lower highs were made first. So the legacy's there, but I'm very aware that what you've done, so the market's gone into a pause. Even if it takes out 64.33 and turns it to higher lows, higher highs, the fact that you're under the 18-week average of closes does not excite me. That keeps the bias down. So not that friendly of a chart. The only thing I'm looking at is the possibility of being short the market. In the energy sector, identical. Lower highs, higher low. Take out 30.65 and I think the trade comes back in on the short side of the market. Getting out of shorts, 36.46 will I think take people out of their short positions, won't start a buying campaign. That's how I'm viewing it. QQQ, battleground, 18-week average of closes. You tacked it twice here, tacked it twice here. What do we do from here? Should you take out 216.51 after this long rally, you get a fresh new signal that says higher lows, higher high. Could you be going up to that high? It's a chart. I don't look at the fundamentals. I just look at the chart action. So the bears, they have to defend it right here, but they've given up if they didn't take some money off at Bollinger Bands and 100-week average. What are they looking for anyways? When you come over to the EFA, the emerging market, again, I've put on your Fibonacci numbers. You only had a 38% retracement. And I'm very aware the market's got the pattern of higher lows, higher highs. I think the bears are out of this market because of that. And I think we're now looking to see from what level do we get a new round of bearishness, or is the bear market just over? But you have to have an open mind. There's nothing on this chart that's bullish. The fact that you're under that 18-week average keeps my bias down. GLD. GLD is at a zone it should have a lot of trouble with. 95% of the time, the market's going to trade within Bollinger Bands. That's these black dashed lines. Do you see them? Why are you fighting that? I don't care if it's a weekly chart or a daily chart. That's what the market's fighting. It hasn't given anything up. It's still on the weekly chart bullish, higher lows, higher highs, but it's going to have a hard time just popping and running from there. It probably should go sideways. That doesn't mean it has to. The bulls are in control, and even if this market, as long as you don't take out this week's high, you can extend this break even further. Now, if you took out that high and then turned down, it'd be a sign the market giving up at that number and turning back down. You haven't done it yet. When we come to the gold miners, I'm going to go with what I teach. The same thing here. Let's see if I can get this to come in for me. Yeah, there, it's going to let me do it. Higher lows, higher highs. What I teach is that if it continues up, the first challenge of the upper Bollinger Band is where I'm expecting the pros to step in and take money off the table. They understand the algo. The algorithm on this is 95% of the time, you're going to have a hard time staying over it. What do you think I think they did this week? That's exactly it. That doesn't mean they're bearish. They may hold on to some positions, but they're taking chunks. TLT. On the weekly chart, you still have higher lows, higher highs. It is still bullish. It loses that should you take out 163.48. It hasn't lost it, so the bulls are still in control. Higher highs, higher lows, bias up, momentum up. FXE, still in the bear camp. Lower highs, This low right now this week got to 101.73, taking out that one. You kept this whole play alive. Are we going to the 197? Momentum is down, bias down, trend down. You'd have to get back over last week's high to negate this, and that from here is what going to be in the 103.86 level. So you put it together, you're trying to come up with chart patterns that make some sense, and every now and then it is a good thing to take a look at what? To take a look and see what the bigger chart picture is. That's why I do these on Fridays. Do I look at them during the week? You can count on it. I do. I want to see where the markets are at in relation to the bigger picture. I put out in the afternoon. Typically, I'm recording by 4. Typically, sometimes it's 4:30. But I'm going to cover 27 ETF videos for you. I'm not in that one. I talk into it. And my charts look different because you're getting more studies. And I teach you the studies as we go along. I throw out chart recommendations. I throw out buy here, sell there. This is what I think you can do. This is how to do it. Here's the stop. Here's the play on it. Momentum plays, swing trades. You get all that. $8.95 for 30 days. Give it a try. What can I tell you? Just go to our website, under the word research, try it. You might find you really like it. I'm Ira Epstein. You have a great day, and I will talk to you all Monday. Have a good weekend.